Welcome to the Trending Tokens podcast with Jeff Pulver and Jake Vale. Jake is a marketing consultant for tZERO with a background in financial newsletters, investor relations, and extensive marketing experience with retail financial products and fundraising. Jeff Pulver is an internet pioneer known for his work in VoIP and has more recently invested in over 400 blockchain startups and shares his knowledge through a program called the Pulver Edge. Last week, the government of Bermuda authorized the creation of a Global Fintech Advisory Board, GFAB. Jeff is a member of the GFAB and chairman of the Blockchain Token Association Board. All opinions on trending tokens are meant for informational and educational purposes only, and nothing is to be taken as trading advice or a specific inducement to make an investment or follow an investment strategy. Let's get started.
It's amazing opportunity for all those who want to get in now, early, as well as be involved as the industry grows.
That's awesome. And what was the other project that you're doing in Bermuda?
Well, this week it was announced that I joined Scrumble as a executive vice chairman, and they recently announced GAX, which is the Global Asset Exchange, and they'll be opening up shop in Bermuda as a regulated exchange. So they're not going to be a crypto exchange in the gray. They're going to actually be following the rules of the Bermuda Monetary Authority, the BMA, and the recommendations, and being a properly regulated exchange. And I'm really excited since this will be a security token exchange. So very much living up to the words I had in December. I had no idea a few months later I have the opportunity and the honor of joining a team which is actually in that space. And it's super exciting, and this is the super early days for where the industry grows into, and it's absolutely exciting.
That's great. At Consensus this week, how did you feel about the STO space? Does it sound like that's the new hot thing that everyone's looking into?
I don't know. I kind of do statistics when I do conferences, and maybe it's because I've been in the trade show business since 1996. And depending upon the industry and depending upon my mindset, I look for different indicators. This year, I was looking at hoodies versus suities. And at past Consensus events, there was a lot of hoodies. Not so many this year. I think the suits outweighed them by far. And that was sort of a reflection of the types of companies exhibiting on the exhibit floor and the types of conversations to have. On one hand, it means that the soon-to-be disrupted are really interested in what's going on, because the suits were mostly not only investment banking, but folks from all over the capital market space, some investors. The innovators, they were mostly outside of Consensus. There was a lot of sentiment that they needed to be awake at night for parties. And so during the day, they were outside having fun, doing meetings, great meetings. And internally, it was not as buzzy as I had hoped for. It was different than last year. I'd say having Bitcoin at around 8,000 during Consensus Week in New York certainly added a smile to some people's faces, and it was a quite positive feeling as opposed to 6 months ago, where we were in the heart of a deep winter prior to the actual winter. And it was it was interesting. There were a lot of announcements coming around Consensus from startups. And I'm sure a lot of great news was just buried by the stuff that some of us tracked. The overall, it's clear blockchain is not going away. People in the financial technology industry around the world are growing in numbers, and the innovation will happen. But as far as what's happening with the security token space, I did run into a bunch of 2018 celebrities, which are now sort of invisible. Folks behind some of the biggest token offerings of security token offerings of 2018. And there's not much going on right now, mostly because of the fact that their tokens are not trading anywhere. A lot of folks decided to wait the entire year until they allow and facilitate trading. And they perhaps might have been looking at how tZERO is doing, and they don't seem to understand that the only trading is taking place on the tZERO token are accredited investors to accredited investors, and that the reason the trading may be thin, it's because there's just a small percentage of all the accredited investors in the world that have been onboarded onto the trading system that tZERO is using. So it's, to me, not a reflection of anything. Perhaps maybe it's access to investors who are accredited, who want to come in and trade or not trade that particular token. A lot of talk about the future, and then there came the conversation about what's wrong with the way things are today. And so there is, going to be people who are going to be set in their ways, and the next generation will execute the vision that we believe in. But there's no denying this. Security tokens are not going away. Digital securities not going away. And what was clear and obvious is there's enough real estate to be tokenized that of itself will be a wonderful space to be part of. And I do think debt is going to happen big time, that we're going to have digital debt recorded on blockchain. And then there's all the corporate stuff, things that I have not actually heard too many people talk about is, what about municipal bonds, digital? What about corporate bonds, digital? What about government bonds, digital? Where does fixed income go? How do we evolve the fixed income marketplace? There's a lot of possibilities of what we can do with smart contracts and maybe create instruments that are both debt and equity. Perhaps there are instruments that have neither debt nor equity and just a piece of revenue. And we saw people this week announce intellectual property being put up as security tokens, a pharmaceutical company. So there's a lot there. And if someone has a forward-looking mind and can see and know that this may not be a 2019 or 2020 thing, but it will be a 20-something thing, it's a brave new world with great opportunities ahead. If people were banking that 2019 was the year to bring it all in, they may be a little disappointed.
I could see that. I was at the Money Show this week in Las Vegas, which is a retail investing show. It's been going on for quite a while. I think I started attending it about 10 years ago when I was in the financial newsletter space. And the show has gotten smaller and smaller each year. Fewer and fewer people show up. A lot of it was stock promotion and sort of investor relations, marketing. Exchanges like E-Trade and Charles Schwab and all those guys used to attend. This year, it's kind of dwindled down to not very many people actually showing up at the show. But the marketing companies that are generating leads, generating investors, verifying accreditation, they're all walking around outside the show, similar to what you said is happening at Consensus.
So people go where the market is, but they don't necessarily come inside. And I think that's key. So it's not like people have come away, have left the market space. It's just that what's relevant for them at this phase of the Money Show are people to actually see each other and to have meaningful conversations, which may not be around the curated content of the Money Show, but around the curated delegates and community that the Money Show attracts.
Yeah, these guys do a lot of emailing to generate, whether it's stock trading or investor leads. And about a year ago, when the ICOs were as hot as they could have been, there were people coming out and trying to rent these lists. And I'd made some introductions to Zacks Investment Research and a couple other companies to suggest that they would be a good outlet for list rental to generate ICO stuff. This time, it seems like maybe one or two of them tried it, but they're not interested in the security token space yet because they want to see an exchange. They want to see trading of tokens. And it's funny because they actually could bring the trading volume. The liquidity that we're looking for could come from, these kind of emailing and seeking alpha banner ads, Zacks banner ads, any of these other companies that have financial content. And they've all tried to get into security tokens. There's just been such a long delay in the launch of any exchanges where they can trade that a lot of these companies have sort of developed their marketing programs that would be available. And then they pitched them to ICOs, and then the ICOs went away before security tokens were ready. So the bigger companies are ready to start working with security tokens. They just don't have a lot of money lined up currently for marketing.
For going forward, I think perhaps one of the things we may want to suggest to the industry is changing the naming. Since security tokens became security tokens because they were not utility tokens, and really when people were first talking about what is not a utility token, they're saying, okay, it's going to be regulated. So there's the whole class of digital assets where the issuer and the investor would like to have, whether it's a light touch or heavy touch, they would like to have the investor relationship reviewed and monitored by an authoritative entity. And so when we're talking about security tokens for purposes of the conversation on the podcast, we're talking about the issuance of digital securities that will be under the domain and purview of a certain government wherever that exchange happens to be located, where the trading is taking place, separated from perhaps where they're issued, and separated from where there's custody and where they may be exchanged or otherwise swapped. And so there's a lot of things that we can talk about and think about in terms of how to evolve the marketplace. If it was simply just the digital representation of ownership shares, that can happen sooner. There are going to be reasons that we can move the market to accelerate the acceptance because it just makes sense to do things in a digital environment. And there's a lot of resistance because people are just so used to doing things the way they used to be. Also, traditionally, the way that the stock market works with who has custody of the stock certificates and the whole idea of trying to reform, change an old existing ecosystem, that gets really complicated because I don't see that environment changing all too fast, all too soon. But when we're dealing with private companies issuing debt, when we're dealing with forward-looking cities issuing debt, perhaps forward-looking governments like Mauritius and Bermuda, which have actually created new regulations, so that in America, when we look at digital securities, we have to look back to 1933, 1934, 1940, as well as the Jobs Act. In Bermuda, it's the premiers, the current government is responsible directly for how digital securities are treated, what an ICO is, what an STO is. And I believe that when we're using terms which some consumers may not understand. Consumers heard blockchain, they heard about Bitcoin. I don't think they really know what a security token is just yet. And they may not even know what a utility token is because they were so drawn into the noise and the amazing stories of friends or people that put a little money in and ended up with a lot of money out. And so there's a lot of that greed and a lot of that opportunistic timing, which shaped the first phase of this market, where the world was paying attention. And then when things got frozen, their attention went to other places. And now that the market's coming back because it's actually the technology is being built and we can start to rely on this for day-to-day work, there's going to be much more opportunities. It goes wider and deeper in terms of how people can get involved and how companies will be transformed due to the advent of the availability of this technology. I do believe longer term, it's not really just capital markets that we're going to be talking about, but it's how the deployment of blockchain technologies on the back end has transformed one industry after the other, after the other, after the other. And very much like the way that the internet gave us TCP/IP, which became the connection protocol and the connectivity protocol that's used for many apps. And for most consumers, it's behind the scenes. Although if you remember the 90s, you might see your TCP/IP drivers being loaded. These days, that's actually software that's inside of a chipset or it's inside of the operating system. The enabling blockchain technologies, which are being built on top of TCP/IP, which enables the network effects and all these other amazing benefits, because we're now building an entire ecosystem on top of connected networks, will create vast opportunities to rethink and resolve problems that we once thought about, but now we have a different set of tools we can use to fix and change the solutions. And so, while security tokens right now may be very much focused between an issuer and an investor and an asset, the shift that this represents is monumental. And it's easy to see how trillions of dollars of assets in the near future can be represented digitally, and even much larger numbers will be associated with the deployment of solutions for enterprises, for large companies, medium companies, small companies, which will change the way business happens. And so, the money show in the future might focus on the big picture and talk about how these new technologies will change how consumers interact with banking. Consensus might think about bringing in other industries to showcase how the deployment of blockchain has revolutionized dairy farming. Perhaps it's the space industry it's revolutionizing. Perhaps it's the accounting industry. But there will be industries which affect many people day to day, but they don't necessarily see it because it's not what their focus is. And so it is also the opportunity for fintech to expand its reach and its depth, and so that we're much more meaningful. And then this is the re-education. There's an education that has to happen on the capital market side for the institutional broker dealers, but also on the consumer, also on this just the average ordinary investor, the person who might buy 50 shares or 100 shares of IBM today and sell it in 3 months, or even people taking a long-term position on buying and holding. As these systems evolve, and as when the whole IPO craze, the tech craze of 95 to 2000, when the dot-com era was upon us, it's not like companies never went public prior to 1995, but there was a time when everybody wanted to get in a deal because it was hot, exciting, it was unbounded where it was going to go. And that creates so much excitement for Silicon Valley and so much excitement for entrepreneurs to get in on the next big thing. And you had all that fear of missing out by so many people. Right now, there is no FOMO associated with too many tech deals that I've seen, particularly in securities tokens. It's inside baseball for a few people who will tell you that this project just, got invested in, it took 22 seconds and they raised the amount of money they wanted, or it took, 18 seconds, or it took 2 minutes, it took this. So the people on the know, definitely they want to get in on it, but there's a much wider range of people who will be both accredited investors and unaccredited investors in the future, who will have an opportunity to participate in the great upside that the shifting and evolution of the capital markets industry will offer everybody, including those who want to issue and participate and play with security tokens.
Do you feel like the people that are trying to issue security tokens now are the same ones who were looking at it a year ago? Or do you think we shook out a lot of those people who were ICO guys that decided to change their ICO to an STO, do it internationally or something?
I would say that some of the booths that were at Consensus were from projects that survived, and those were not about security tokens. But but some of the people who were exhibiting were companies that you would recognize if you knew the deals, where they still have money, they still have savings, and they're either going down the path they once were on, or they shifted focus and they are trying to rebrand themselves and perhaps shift and change and survive and embrace change. There are new people coming to the market. Many of the people who last year I was talking to who were interested in doing some type of offering ran away from rather than into a security token offering. But then I realized that these folks I dealt with were not that educated. They didn't want to engage lawyers or accountants. They didn't want to deal with accountability or audited financial statements, or every month or every quarter have to report back how they're doing. So when I started seeing behavior like that, I realized, well, maybe these are not people I actually want to work with. And but as the news and opportunities that this represents get out there, I do think that people will take another look at crowdfunding. That if you're a U.S. company and you need to raise $1 million, a Reg CF may work for them. There's people doing right now Reg A and Reg A Plus deals, not tokenizing them. They're just doing Reg A, Reg A Plus, as well as the Reg S and Reg D deals.
I've seen a lot of this, the Reg CF ones come through, especially for that first $1 million, maybe peel off 15% of the equity in the company and then raise that first $1 million to sort of put your story together so you can go out and have a much better story for a larger raise.
I actually have a new company, which I started recently doing work I've been doing for 20 years called the Pulver Effect. Or actually Pulver Edge. The Pulver Effect was, I didn't go with Pulver Method because of some Netflix shows, but the Pulver Edge is really all about helping individuals and companies and mentoring people, companies, and providing advice. And I was thinking about doing a crowd CF for my new company, because I enjoy the idea of bringing in people who I know for the last 20 plus years who might be interested in participating in some upside in a new company, which I'm doing. And so I've looked at what it would take. The costs are not that great. It's nice to have revenue though. And so I only launched the business May 1st. And so I'm onboarding some customers now. I'm not at the scale I would probably need to have in order to have a great, amazing offering. But I'm looking at CF as a way to go, because I don't really need millions and millions of dollars to make this business work. I just need some money to bootstrap and to grow. And I do think that crowdfunding, while people who are familiar with Indiegogo and Kickstarter and have participated in projects for the last number of years, also understand the value of providing equity to entrepreneurs to help expand and explore the future for whatever sector they're in, it's still an untapped market for so many companies. And now that the ICO is not the way to go, if you have a great idea and a great team, and you just need capital, while there is smart money to be found, the crowdfunding opportunities are there too. And I do think that the pink sheets, if you will find new life by monitoring the incremental growth of security token offerings. And frankly, because I think it's a Reg A Plus deal. If it wants to be, after it goes through, it actually gets listed, and there's trading that could happen. I believe in the future, why not tokenize a crowd CF offering after the money's raised, and then offer the investors to have the opportunity to have digital representation of their equity. Why not? And for those why not? Because it sounds complicated, and for people who are used to investing one way, this is a wrinkle which maybe they don't want. But I do think that is a future in front of us, which means that there's going to be great opportunities for consultants, for attorneys, for accountants, for financial planners, and for other people that are in the know and want to help educate their clients and future clients where the market can go. Overall, I feel much better about the marketplace after Consensus 2019 in May than what I was feeling in the Marriott Marquis in November of 2018. I will also mention that I was very grateful to have a full house. I hosted a post-consensus breakfast together with Scrumble Network, and GAX, which is the Global Asset Exchange, which is part of the company. I'm executive vice chairman of Scrumble, which sort of makes me executive vice chair across their product line. And it was just amazing to see the positivity, the smiles, the hugs, and the conversations, and the volume of the conversations. The breakfast was started at 8:30, it ran till 11. People stayed there past 12. And then the Blockchain Token Association had a member meeting from 12 to 2. And I was just like in another world. I was in, I somehow wish I could have meaningful conversations as I had, plus say hi to as many people as possible who came there. I mean, it was just beautiful to see. There were folks literally from every continent of the world was represented, except Antarctica. There were folks from many different disciplines, but they had what they had in common is an interest and wanting to have more understandings about the market and where it was evolving to. And it was great. I didn't see, people were in generally good moods. And there were survivors because, after 3 days of consensus and late nights and early mornings, they came, and they came in big numbers. And it was great to have it. And I'm very grateful to Scrumble for not only for the opportunity that they offered me personally, but they came in and they actually sponsored the breakfast, and they sponsored it together with the Blockchain Token Association. And because of that, we were able to take over the entire restaurant, which is a large size event. The regular breakfasts I have in New York are usually 40 to 50 people. They don't encompass 250 people. So it was just quite interesting to watch. And watch the body language too, and observe the conversations, not just, so I was observing from afar. So what I heard is the volume, and I was watching the hands and people moving and how animated they were. And it was just warm and fuzzy. And so I have great expectations set for the remainder of this year as the market continues to evolve and people get more confidence in this. And crypto as we understand crypto is slowly being adopted into mainstream retail businesses, and exchanges start to open up around the world under regulatory authorities which are forward-looking, forward-thinking, and offer and inspire and incentivize entrepreneurs to open up shop in their countries. And it's a brave new world for all of us. It's certainly not a time to stay in one modality, but be open to how these things can and will evolve.
Do you think a lot of the current crypto exchanges will still be around 2 years from now that are in the United States or operating in the United States?
I think that to say you're an exchange in America is a misnomer. The Global Asset Exchange is a regulated entity in Mauritius, in Bermuda, and they only are an exchange because the government recognizes them as such. if you're asking, do I think the companies that are doing business known as certain types of BitX, whatever their names are, in America will have the fortitude and the strength to stand up, to be accounted for, to sign up for all the money transfer licenses they need to have, to be fully open to FINRA, to SEC, and whatever state regulation there is? No, not everybody. But those that do stand up and say, regulate me, and say that we want to be in compliance and we want to understand what does it take to actually get those check marks so that so our investors are completely comfortable that we are here to stay and we're here to help supplement and be part of this much larger ecosystem, they will survive. But the folks that are running away from the law for whatever reason, for those that don't want to be regulatory compliant, those which do not want to listen to what the rules are, they may be challenged. And some states may be more open and liberal, and some states may close up. And so it's going to be a hard thing. Now, what happens if these exchanges go offshore? I don't think all of them are going to see countries where they're going to be recognized as a proper regulated exchange. They may find countries which don't know they exist, and they're just using that country for themselves. I don't think that we're going to see 100% compliance, and I don't think 100% of the exchanges will be there. But we'll see. Certainly, some of the exchanges from that existed 4 years, 3 years ago, 4 years ago, they're not here so much. One big issue that we still have to fight as an industry is cybersecurity and trust. If every exchange follows what happens in Canada with those wonderful folks who allegedly the CEO died and all of a sudden his money was missing.
Yeah,
I don't know.
I'd like to see the body.
That'd be a great movie to make. Maybe to inspire. It's ripped from the headlines. Some sort of movie, or at least as a backdrop to something. So there's shade and shadiness no matter where you go. Every market, every industry has it. I don't like the word crypto because when I think of crypto, I associate it with darkness and activities, which I don't necessarily want to think. Because I like to think the work that I'm doing is a positive, not negative, and that I'm embracing the future and not trying to stay in the past. So we have to fight some misunderstandings. We need to be open to talk to regulators. One of the things which worked really well for me 20 years ago when I was helping to grow the voice over IP industry is at my conferences, I actually held events where it was a town hall meeting with the Federal Communications Commission and entrepreneurs. We were able to totally bypass any lobbyists who were spinning a certain story because the regulators heard firsthand exactly the way it was directly from those people who were creating the companies and defining the services which they wanted to offer to the consumer. And so that helped accelerate the growth of the market, and it helped the user adoption and at least an understanding about reality in terms of what was possible today, what may be possible in the future. And I think that we still need to be spending some time educating teachers in business schools, educating the MBA students who are getting degrees in finance. I don't believe there's enough blockchain finance courses being offered around the world. Some of the leading financial institutions, some of the leading business schools have a crypto agenda, but they really don't have a blockchain agenda as much as talking about the possibility of creating financial instruments which never before practical or possible. They're really, some of them are really focusing on what a smart contract is. They talk about crypto in the general sense, but they don't let you be creative and explore outside the box, which they have to live inside of.
Yeah, I was at a blockchain meetup in Reno about 2 months ago, and one of the teachers from the University of Reno was down there, and he's actually teaching blockchain courses, which I was impressed to hear because I haven't seen that before, and it seems like something that's pretty important.
Yes, I think that's awesome. But those are things that need to happen, not just in Reno, not just New York City, not just in Paris or Tokyo, but around the world. We will one day see 24/7 trading that's real. And perhaps some of the US-based exchanges decide to go global, be recognized by authoritative entities around the world, and they're going to have 22 versions of themselves. So they effectively offer 24/7 trading end to end. It's more of a vision today. than reality, but it will happen. So 2019 is showing me that 2018 was not a false start, but an early start.
Do you think we're about to see a lot of security token offerings coming up?
I think we'll start seeing more security token offerings coming up. I don't think we'll see more than 150 to 200 this year, because as we go to as the ticket size of these offerings get larger in size, will be completely dependent upon the wealthy family offices and the institutions, as well as just the traditional hedge funds and everyone else who typically invest in capital markets. And there's no real rush right now for some of that. And so we need chicken and egg. We have a chicken, we have an egg, and we need to show liquidity. At the end of the day, what is this all about? It's going to be end-to-end volume and liquidity. And we still haven't really truly solved custody. We're still dealing with interoperability, or for that matter, operability. But let's think and pretend for a moment that we can do issuance, that we can actually track investments. Custody is interesting because, these days, if we bought that 100 shares of IBM, I'm not literally taking those 100 stock certificates and putting them on my wallet on my phone or my computer. So if I want to sell them, it's just end to end, and no one sees it. I can do it instantaneously. A consumer today cannot say buy 100 of XXX, which represents a security token, and have it be so simple. Accounts need to be created. AML KYC has to happen. We need to actually look at the whole food system, and we have to make sure that what's being sold or being purchased is actually available. And it's it's solvable perhaps by code, but not by business practices just yet. So we have things to do which are not done yet. So it's a lot of work. So will there be more issues? I think so. I mean, I think that there will be some very outspoken, bold, big thinking companies coming forward doing digital securities, but not as many as we once thought 2 years ago. And then as we get into 2020 and 2021, as the trading systems start to evolve, as we start to see the actual markets take place and see where the trading is and see where the opportunity is, that might inspire some companies to go forward with it. But from a practical perspective, if you are a municipality and you need $500 million to run the city of New Orleans for a special issue, if you wanted to truly incentivize the citizens of New Orleans to come forward and invest in the city, it'd be kind of cool if you are a holder of this digital bond, that you have access to the museums, that you have access to free parking, that you'd be incentivized and recognized by the city as being a good standing member of the city. And perhaps they can give all sorts of perks, digital perks, to people who are buying into and supporting that municipality. Same thing goes to corporations. Same thing goes to the U.S. government or to other governments. It's J.P. Morgan in the 1900s lent money to the U.S. government, and when we look at default of country debt, it's a possibility that country can create with a smart contract and a security token, an instrument which incentivizes the diaspora of that country, from wherever those people may be around the world, if they have a vested interest in country ABC, perhaps to give tax credits or other things to incentivize people to lend money to that country. So the whole world banking monetary fund systems can be disrupted by this, as much as muni bonds and corporate bonds. And there's so many things which are not dependent upon the stock market, which we're looking to the debt markets, and we're looking to really it's a race for capital, access to capital, and incentivizing access to money to help solve problems that people and companies have. And so that may be a driver for all of this. It may be a tangent external to what we're looking for that actually crosses the chasm and helps bring us into the future. So it's I will not discount any possibility of a magical event taking place which disrupts and accelerates what we've been talking about.
It's funny, you don't think about many retail investors in the bond markets, but their money is sitting in savings accounts earning almost negative interest, but they could be earning quite a bit more with access to some of some of those projects.
I mean, but imagine, a small city that has a town theater where the community gets together in the summertime and there's entertainment. And if you're a resident of the city, you get to go to the park. And maybe if you are supporting the city financially, you get to bring plus ones or plus twos or plus threes that are not necessarily from that town. Or perhaps there's there's all sorts of events that take place. And of course, at the end of the year, there may be galas. And if you're part of those communities, you're in. From a charitable perspective, there's so many things that charities can do to create incentives and perks to help bring people together. And if you've ever been to an auction where people are raising money for a cause, imagine at the end of each auction, for every item which is being sold in an auction, we create a smart contract so that we kind of change how these auctions work.
Even tracking charities, seeing what they're doing with their money, seeing what's happening with your charitable donations, everything becomes a lot more transparent.
Right. Transparency is great for some, scares the living daylights out of others, but only in the cases where people have never been so transparent or never so accountable. But there's some charities where less than 10% of what's raised actually goes to the cause because there are professional people, so many involved in the top part of the charity that no one gets the money. And there are other charities where almost all the money, or in fact, sometimes all the money raised goes directly to the cause. So there's lots of reasons why to deploy some of the same technologies that will revolutionize capital markets can also be used in philanthropy, can also be used in many aspects of our day-to-day life, and we just don't think about it because we're so focused on other things that we don't see what is obvious. And the great opportunities in front of us and those great killer apps that will be created will be done by those people who see the obvious before somebody else. Doesn't matter whether it's a very complicated idea or a very simple idea. If you do it before somebody else, you win. And I think that I never was a big fan of telecom operators who are touting one type of technology over the other. I was always about the services they can deploy and what they can and how the consumer benefits because these services were available by them. And I think something similar could happen in finance, that we don't talk about blockchain, don't talk about smart contracts, but we talk about new types of X, Y, and Z. And people get so excited by that. It's powered by a smart contract, but who cares? And it's powered by this next generation of financial technologies. But in the end, we're an engine, and we're some logic, and we're some code. And it's how these things are marketed and explained to the consumer that could help revolutionize the entire financial sector.
Yeah, once people are signing up, just like they sign up for a Charles Schwab account and not realizing that they're trading on blockchain and don't need to understand the background or the history of Bitcoin or anything to start trading, it'll be open to a lot more people, I think.
I think so too.
Awesome, Jeff. Well, I think we could probably wrap it up if you want.
Sure. I want to thank you for the opportunity to co-host this with you. I am excited, and I have a really positive inclination right now about where things are going and why this matters, and it matters a lot.